Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of financial updates. Listeners, we have had a dovetail move by the President Trump on Fed chair and the China tariff situation. But at the same time, there has been comments stating toning down on the tariff wouldn't be unilateral. Such change of stance and commentary has halted the dollar fall as we discussed yesterday, but the length of this hold up is something to be assessed. On the domestic front, April's manufacturing update through flash PMIs looked improving, showing confidence in an otherwise uncertain period. The currency pair also moved slightly higher, with the speculations around the retaliation by the Indian authorities against the terror attacks and the revival or the recovery in some bit of dollar strength. So, JK, what are your thoughts on such updates and how should we be looking at the markets?
Good morning, Shikhar. I think you have already put some key points into the discussion. Yes, yesterday we talked about the damage control that the U.S. authorities were, into. But market is seeing that whatever they had said is not enough, and what the corrections that we have got in the markets have just been reversal of some excess moves on the lower side for the dollar, excess moves on the downside for the stocks. So that's what you have seen. But if you look at the statements so far, they've all come from only the US side, and we have not seen any positive statement from China. And US talks about rebalancing the manufacturing, and China should rebalance towards the domestic economy. These are US thoughts, and we have not seen any statement from China to this. And China continues to say that they have to US has to adopt a more friendly approach and not a coercive approach. Similarly, there is a report in Wall Street Journal which says that the tariffs could come down from the current 145 to around 50 to 65% as a result of a tired approach. And there could be more on some on non-essentials and less on some very critical items for the US. But I say once again, these statements, these are things that are coming from the US side. There is no real progress on some getting onto the table for a discussion. So market is aware that this is not real progress, but it's just starting, and therefore remains cautious on getting too much into a positive mode as far as the US. US dollar is concerned, particularly. And also, I also looked at some statement from China, President Trump, where he says, we really don't want cars from Canada, and Canada tariffs could actually go up. See, this is one tweet that I've seen from the Trump. And then Trump also made another statement. Powell making mistakes by not lowering interest rates might call Lowell. So we initial reaction, negative reaction in the markets for gold and the dollar was based on he's saying that Powell could be removed or something. But while that was reversed today, there is no move to sack him. But I think the moment you talk about influencing the Fed rates, he says, I'll call Powell. So what you'll try to influence the rates. And if the central bank independence is a passion of a strong economic system, and if that is loosened and the confidence is not going to be there, it's not just about removing the uh, you know uh, chairman or not removing. It is about how independently the central bank works. That is key for the investors' confidence, and that really is the question. So market is not going to be euphoric about any of these statements until they see much more sober approach. So, in fact, the meantime, the economic data also has not been so encouraging. The PMI composite actually fell from 53.5 to 51.2. Manufacturing and manufacturing was steady, but the services PMI slipped once again to 50.7 from 51.4. Then Beach Book, which actually conducted by Fed on surveying several districts, shown that outlook in several districts worsened considerably as economic uncertainty around the tariffs have risen. Prices have risen across districts, similar to the prior report. So I think there was nothing much in the dollar for it to recover more, and that's what we have seen in yesterday's markets. Stocks initially rose another 2+% in all the indices, but then gave up much of it and ended with much lesser gain. As far as the dollar is concerned, we had touched 100, but then reversed from there to low 99 again. Gold had corrected almost 6%, and this 6% move was because also we also had moved substantially within a matter of last 15 days, and the positioning itself was too high on the long side to sustain, and therefore the statements were just a trigger for a correction and not changing the trend as such. So as I shared earlier, broadcast also, medium term dollar is going to be weak, and world has realized that US and USD are not as safe as they were perceived to be for long, and US exceptionalism is not in play anymore. However, the process of more diversification will be slow as the world keeps searching for alternate safe assets. Until then, euro and gold are going to be the gainers by default, and we may spend some more time in a correction also, as the investors consolidate their strategies. But once this correction is over, I think we will be clear for much more gains for gold, euro, and perhaps dollar in general as well. As far as the rupee is concerned, it has reversed from its strong position of near about 85 levels, and triggered by initially by central bank buying. And the last 2 days, market has been seen buying dollars, particularly after the unfortunate incident of terror attack in Jammu and Kashmir. I think rupee likely to underperform the broader dollar moves as India-specific issues have kicked in now. In particular, while we have seen some retaliatory measures from the Indian government announced yesterday, everyone is looking forward to some direct action, which looks imminent. So, if in what form and what implications that will come is keeping the market unsure and probably on the defensive. So investors in Indian market will be cautious, and we have already seen some unwinding of long bets on the rupee, which was quite euphoric just a few days back. And then, of course, the stock market, which had gained almost 11% in a very short period of time, is seen giving up some gains, particularly as we also are into the monthly the settlement day today, and we are going into a long weekend once again, and that the period of uncertainty and expected actions from the Indian government will keep the markets cautious, and definitely can see some corrections in both the rupee and the stock market. Thank you.
Okay, JK. Yes, folks, we can definitely see some bit of correction in the markets and the dollar rupee prices, as the action from the Indian authorities on the terror attack is still awaited by the market participants, but some bit of speculative action has already begun on this front. And even though we have seen some sort of retaliatory measures already being announced, a lot of discussions around the impending actions is still there in the markets. As JK mentioned, a search for alternate safe asset is still there by the participants, but as of now, gold being the only preferred option by the, not the only, one of the preferred options by the investors, keeps the possible outlook of a higher gold in the longer tenor alive. On the US front, as JK was talking about, there have been reports by Wall Street Journal suggesting that tariffs can come down from 145% to 50 to 60%. But these are just expectations, and it has not yet been validated by the authorities. And the correction that we have been seeing on the dollar index or the dollar value against the euro and other currencies as well as the gold, it's been some sort of a reversal of the excesses by far, since there's been no relevant statements from the Chinese authorities as well on the trade dispute front. So there can be a lot of changes coming in on this particular front. Lastly, the independence of the central bank is still one of the concerns for the investor, and the consistent comments by the US president on the actions that the Fed should take is closely being watched, as it is not a desired situation that the independence of the central bank is being questioned at every now and then. So that's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening.